Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what we are looking at. Once again, I've put it on loud, now I can hear exactly what I'm saying. Thank you very much for tuning in once again. My name is Jess and we do these live streams every single weekday talking about what's going on in the markets and taking a look at the Bitcoin chart as well. We are currently streaming to both YouTube and Binance Live at the same time, so if you are new here, please make sure to check out all of our social medias. We are Crypto Saving Experts on YouTube and Instagram and TikTok, and we are Crypto Saving Exp on Twitter, just because you can't have a username as long as the business name. But there we are. Let's take a look now at the price of Bitcoin and see what's happening in the markets today. We have Bitcoin sat at $27,939, and we have Ethereum sat at $1,762. So over the last 24 hours, we haven't seen too much of a fluctuation. We have seen not much of a CME gap on the Bitcoin chart this weekend. Let's do a little bit of Bitcoin analysis first to start today's stream, and then we'll run through it again at the end of today's stream. We have Bitcoin currently sat at, let's take this away so you can see this a little bit clearer, $27,900. Now on the 1 hour chart, I can see we have this level of support from all three of these points here, which is currently sat at around $27,500. We also obviously have that major level of previous resistance, which I imagine will act as support at $25,250. So I'm just keeping an eye on those levels, but really the movements in the price of Bitcoin is really dependent on what is going on in the news right now. And that's why listening to these live streams is so important, because listening to the news can really determine what is going to happen next in the cryptocurrency markets. Let's take a look at the CME chart quickly, because I know a lot of us like to analyze the CME chart. It is a great trading tool to look at. The CME chart creates gaps within the markets over the weekend, and we can see if there's any magnets for the price of Bitcoin. But over this weekend, you can see here on the 1 hour chart, this was the final candle on Friday, and this was the opening candle last night on Monday morning. So you can see here that we haven't really seen a CME gap, and it was closed almost immediately within the hour, so it wasn't too much of a concern this weekend. Currently we are still sat on the daily chart. If we take a look here, with the CME gap up at $35,300 and one down here at $20,400. So the CME gaps I am keeping an eye on for Bitcoin right now. If we take a look at the Fair and Greed Index, we are up at 64 at the moment. We have seen a high of 68 over the last couple of weeks. Keeping an eye on that, because as I said, when we see lots of greed in the industry, it does make me a little bit fearful. So we are going to keep an eye on that, and we will report that again every single day we do these live streams at around 12 a.m. British summertime we're in now. The clocks have changed here in the UK, so that is what we are looking at. But make sure, if you haven't already, to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. We are the best news show out there. We can take a look here on the YouTube channel. We are currently on 2,774 subscribers. If you wouldn't mind hitting subscribe, and let's set a subscriber goal this week. Let's try and get to 2,800 subscribers by the end of the week. So that's a target of 26 new subscribers this week. I think it's achievable. Let's take a look anyway at some news for the day. We have a huge amount of news to discuss today. First of all, let's take a look at the metaverse. Is the metaverse winding down a little bit? Are we seeing the metaverse, the aim of the metaverse becoming the next big thing in tech? Is that still the target for many of these big businesses? Taking a look at here, we can see I always say this wrong. Animoca. I'm gonna have to go with that one. They've slashed metaverse funds for the second time to $800 million, and this comes after we have also seen that Mark Zuckerberg's Meta has gone for a year of efficiency, and this means job cuts, less metaverse, and more generative AI. We saw that earlier this year. So this is two major companies taking a slight step back from the metaverse. We can see here in an article, however, though, that Metaverse NFT trading volume has hit an all-time high of $311 million in Q1. So really interesting there that these major companies that are trying to progress within the metaverse space are looking like they are taking a few steps back, whereas Metaverse NFT trading is continuing to rise. Now, obviously, there is a big difference between actual metaverse users and people that just trade the tokens within the metaverse, but interesting to see the differences between these two trends. We can take a look here. NFT trading volume in the metaverse reached an all-time high of $311 million in the first quarter of 2023, showing a 277% increase from Q4 of 2022. So just something to keep an eye on there, as always. I'm not a huge fan of NFTs or the metaverses. I try and not be biased in these videos, but I'm not a huge fan. I don't see too much utility. But maybe I'll get proven wrong and they'll continue to do well in the future. Seeing those trading volumes can increase show that there is still a lot of interest for NFTs within the metaverse. So we'll see how that plays out within the next bull run. Even though I'm not a huge fan, it doesn't mean that we're not going to see a huge nice increase for those projects within that space. As I always say, you can't invest in everything in cryptocurrency. You have to pick the ones that you have an interest in and that you're going to continue to research in the future, not just invest in things. Because if you wanted to invest in everything that you think is going up in the next bull market, you'd be incredibly diversified. So I like to cut out NFTs in my scenario. Let's take a look at this to see what is going on next in the news. We have the value of blockchain gaming market to see 11,084% increase by 2032. Now, again, I'm not a huge fan of the gaming market, but investing in cryptocurrencies within GameFi is still a profitable sector. I'm not massively against this sector. I'm just not a huge fan and don't see how games within Web3 will get that mass adoption that they are looking for and that they deserve. It's not that the gaming within Web3 is a problem. I think rewarding users within the gaming industry with real assets that they could actually sell for money is a brilliant way to monetize what they are doing in their free time. But getting adoption of these games is incredibly difficult. Getting adoption of a Web2 game is incredibly difficult. So adding that extra layer of being within the Web3 space and being within cryptocurrency, that scares a lot of people away. So that is what I'm worried about for gaming. Right now, it is the amount of adoption that we can see for those games, but I still believe that these projects could perform incredibly well within the next bull market. But just keeping an eye on this, we can see here that some people have very positive estimations for games within Web3, and we can see here that it's predicted to see a 11,084% increase by 2032. So let's keep our eyes on that. I'm sure we'll have a huge amount of new games being launched in Web3, and maybe they will be good enough to gain attention from Web2 users and create that mass adoption that they deserve. Let's take a look at the next article here and see what's happening here. We have a huge amount of news to discuss here today. Let me just check in with the chat and see what they said. Let's take a look here. Jason Smith said, come on, Jess, they said the same about the internet way back then. Now, yes, exactly. I do believe that if Web3 games can see adoption, that they can move forwards. I just don't believe it's the first sector that will see mass adoption, unfortunately. The amount of adoption needed for a Web3 game to become mainstream is insane, and I just don't see it happening right now within the short term. I do believe that the tokens will see a nice increase, and that's not me saying it's not a great investment opportunity. I just don't see Web3 games getting the amount of adoption that I would like to see. And I think other sectors could come first in that wave of adoption. Taking a look here, Lee said we were in fear and extreme fear for ages during the bear market. It didn't mean much. The Fear and Greed Index is actually a great instrument to use to predict the future price of the asset. Usually when we do see a lot of fear, it is a brilliant time to invest in the market. As you said, it was in the extreme parts of the bear market. In fear is definitely one of those on the bigger time frames that we are looking at. When it takes fear and greed, we're looking at on a bigger time frame of the chart. It's not really useful for like day trading, but it is still an interesting tool to look at. Right now, I wouldn't say it was as relevant because the moves in the markets are very much dependent on what's going on with the banking system, but it is still an important factor to consider when looking at investing and trading. Let's take a look at the next articles here. Anyway, we are moving on to the news about Coinbase. Let's make sure that the stream is all running smoothly. Let's check that everything's running. as it should. I don't think it is. Let's take a look at this and check that everything's okay. Give me 1 second. Can everybody hear me okay? Please let me know that everything's running fine, because it's not looking particularly fine on my end. Let's get on to Coinbase versus the SEC and see what's going on over here. So Coinbase CEO Brian Armstrong calls for pro-crypto lawmakers after the SEC notice. So Coinbase received a Wells notice from the SEC, which is basically a warning that they are going to do a huge amount of investments into Coinbase and try and spot any problems within the company. Now, Coinbase only went live just over a year ago, I believe, where the SEC did a huge amount of investigations into the company, and the SEC said that was perfectly fine and they could launch as a public company. Now, the SEC have changed their tune. So we can see here that the CEO and co-founder of Coinbase, Brian Armstrong, has called on crypto proponents in the US to join political forces in their various districts to achieve clear regulation for crypto. This is something we talk about so much here on the channel. Regulation within cryptocurrency is just not clear enough. We need clarity on the regulations within the space. The SEC have gone after many different cryptocurrency companies recently. We've seen Paxos stop minting BUSD. We've now seen Coinbase receive a Wells notice, and many different fingers being pointed at cryptocurrency companies saying that they're offering unregistered securities. Now, we've said this a lot, but to recognize if an asset is a commodity or a security, we use the Howey test. And the Howey test is a test that was created back in the 1940s that determines whether something's a commodity or a security. As you can tell, this is a very, very old method, and cryptocurrencies are a new technology. The Howey test doesn't fit on this new sector, so we need clarity within the cryptocurrency industry so that these companies can abide by these rules. The clarity is just not there, and these companies want to be regulated in the right way. They want to follow the regulations so they continue to build and grow, but without that clarity, they're really struggling to do so. So we can see here, Brian Armstrong has revealed that Coinbase will raise 50 million crypto users in America to engage in politics, support pro-crypto lawyers, and attend town hall meetings to ensure the government hears their voices. And the CEO has said, we're going to start putting out content where people can contact their congressmen, donate to pro-crypto candidates, show up at town halls, and make your voice heard. We are going to elect pro-crypto candidates in this country to ensure that our success is ensured. And that is really, really important. And this isn't the first that we've seen from Coinbase trying to help create clarity within the US regulations. We've also seen earlier this year, they launched a campaign called Crypto 435. And this was in February. And this was to try and help get cryptocurrency users' voices heard throughout the process of regulating the industry, because we are seeing regulations tighten all around the world right now for the cryptocurrency sector, and seeing those regulations be put in place in the correct way that allow the industry to continue to grow is in our best interest. So we want to make sure that us as cryptocurrency users get heard when those regulations are being created. So we can see here that due to an increased crackdown on crypto and a lack of proper regulatory framework, the exchange launched a pro-crypto advocacy campaign dubbed Crypto 435 in February, calling on its users to join the crusade. So Coinbase said it would equip the community with the necessary tools to advance the campaign across the 435 congressional districts in the US. And the move shows that Armstrong has changed his heart regarding his stance on mixing business with politics. In a blog post published on September the 27th, 2020, regarding supporting political causes, Armstrong said that the exchange would not engage or advocate for any political causes that go against the company's mission to build. Now, things are going against the company's mission to build, so he's gone against that and said he wants to work forwards and help create clarity for the cryptocurrency industry as a whole. And I hope to see other cryptocurrency companies take that step as well. And following Coinbase's footsteps, we need to work together here to make sure that regulation doesn't stifle the cryptocurrency industry. That is something really, really important. Let's take a look at the next article here to see what is next in today's news. We are continuing with the Coinbase story here. Please don't forget, if you are enjoying today's stream, to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. We do these live streams every single weekday, making sure that we're all up to date with what's going on in the markets. I would say right now it is more important than ever to be following the news, to know what's going to happen within the cryptocurrency industry, because what's happening with the Bitcoin price isn't just down to chart analysis right now, it's down to what's happening within the traditional financial systems as well. So coming here to these live streams every day will help you understand that a little bit clearer and help you understand why Bitcoin is such an important asset right now. Let's take a look at this next article here. We can see that the Nasdaq is aiming to debut its crypto custody service by Q2. And now I would like to point out that Lady of Crypto, a famous influencer over on Twitter, has tweeted about this, and I thought her opinions were very, very interesting on this. So we can see here she's tweeted, "I see many celebrating this news, but we should be mad. They're going after Binance and Coinbase, but allowing the Nasdaq to open crypto custody services. As the traditional finance gatekeepers are seizing control of crypto, why do we cheer them on? People think this is directed at Nasdaq, but it isn't. My anger is directed at US regulations employing double standards when dealing with crypto-friendly banks and exchanges. The SEC issued a Wells notice to Coinbase and they told Paxos to stop minting BUSD. A few days ago, the Fed denied Custodia Bank application for supervision. Custodia claims that there were many procedural abnormalities. They are going to war with crypto while giving their buddies, the Nasdaq, a free pass. It's maddening." And I believe that CZ himself actually did reply to one of these tweets about this, saying, let's find it in here. "It's okay, we welcome everyone to crypto, the more the merrier." And she said, "I'm not mad at the Nasdaq, they are doing their thing. The US is going to war with crypto-friendly banks and exchanges while giving their buddies a free pass. In my opinion, worst case scenario, we live in a world where the people who run traditional finance are the people who run crypto." And that is a very important point. I do very much agree with her on that scenario, and that is something that we could see regulation guide us towards. How was in this scenario where we've created this decentralized system with cryptocurrencies, with blockchains, and with Web3, but it ends up in the hands of those big players within traditional finance, and we sort of end up in the same scenario as we were in before. So that's something that we need to be careful about. Let's move on from this news now, though, and take a look at here. So we can see here that Coinbase plans for a potential inflation-pegged stablecoin. Now, this is incredibly interesting. Usually when we invest in stablecoins or hold stablecoins, it's because we want to get out of the volatility of the cryptocurrency markets. Everybody knows that cryptocurrencies are incredibly volatile. So people look at stablecoins as a way to move in and out of their positions as and when they see fit. But the problem with stablecoins is we are still getting exposed to inflation that we have with fiat currencies. So how do we get away from that? We have an inflation-pegged stablecoin. So interesting option here. We can see here Coinbase appears to be planning a new form of stablecoin dubbed flatcoins, which aren't pegged to the US dollar, but instead track inflation, creating a data-based peg. So Brian Armstrong, the CEO of Coinbase, retweeted a Twitter post suggesting Coinbase is seeking builders to outlay plans for a flatcoin. The tweet contained a screenshot from a request for builders post on Coinbase's recently launched Layer 2 Base. So Base is Coinbase's Layer 2 solution built on the Ethereum blockchain, which aims to provide a low-cost, developer-friendly chain. And the post outlined Base is for everyone, but it mainly outlined proposals for that Base ecosystem fund, with flatcoins being one of the ideas. So taking a look at this idea of having a stablecoin pegged to inflation, we can see here that it would increase in value as inflation goes up and decrease as it goes down, meaning it would be on par with goods and services. One downfall of stablecoins that peg to the US dollar is that they are subject to the same inflation as fiat currency, and that is what we have just discussed. If US inflation came in at 7% year on year, the idea would be that the flatcoin would adjust to match inflation. If it started being pegged at $1, it should theoretically increase to $1.07. Although it is still unknown if the flatcoin's design will adjust to inflation month by month or based on year inflation as it is released, or it will wait until the end of the fiscal year to match it. So there's all of these questions surrounding this right now. I'm sure it'll be cleared up if this is something that they actually launch. It would be very interesting if they did so, because a lot of people can be incredibly confident that we still have more inflation on its way. So having something like this may gain a huge amount of attention. Let's take a look at the next article here. We have one last article discussing Coinbase. We have Coin, which is the stock ticker for Coinbase, has remained bullish throughout this process, throughout receiving a Wells notice from the SEC. And this may be because it's decided to step up and decided they want to start this campaign for cryptocurrency and help with those regulators regulate the cryptocurrency space in the correct way. People are looking at Coinbase and still looking at it as something that we should drive towards, and we can follow in their footsteps. They're still moving forwards throughout these problems that they are facing. So we can see here, let's take a look at the stock price. At the point of this, we did see a 1-day coin chart below. It shows that the share price bounced off the 50-day and the 200-day moving averages, using them as a level of support. We can take a look right now and see how this has performed in the recent couple of hours. If we take a look at TradingView and take a look at Coin here, we can see that overall it did see a move to the downside following that Wells notice, but it seems to have bounced pretty nicely. It went all the way down to $61.55. We're now at $67.82. As I was saying in a stream last week, if we take a look at the daily chart, on the price of this stock, since the start of the year, we have seen a price increase. Let's get this right. We started the year down at this point here, at $36.61. We've already seen a price increase of 85% for the stock of Coinbase. We could also take a look at the lowest of the year to the high. We have seen from the start of January a high all the way up to 176%. That's higher than Bitcoin. Now, this is quite common when the price of Bitcoin increases. We usually see cryptocurrency related companies increasing as well, so cryptocurrency exchanges and mining companies as well. But that is what we're looking at there. And hopefully this continues and Coinbase continue to fight their battle and help make the regulations within the US a little clearer. Let's take a look at what's going on with the banking industry now, though. We have a huge amount of information to discuss here. Let's take a look at this. We have, after the chaos of 2008, let me recap this first. So I've pulled up a couple of articles here, not all just from Crypto Saving Expert, but if you do want the best cryptocurrency news, make sure to go to cryptosavingexpert.com and press that big blue sign up button. You get access to the entire website completely for free. We have news, guides, cryptocurrency courses, and market data all for free, and we are growing very, very quickly. So make sure to stay up to date and get started on these cryptocurrency courses, because we're going to pile on more and more and more and continue growing the website so you can continue learning about cryptocurrency and get more and more involved in the space. So make sure to do that, and don't forget to like and subscribe and press the bell notification on today's stream so you don't miss future updates about what's going on within the cryptocurrency markets and within traditional markets as well. So let's take a look at this. We have more concerns about the banking system. So I would like to point out that after the chaos of 2008, regulators around the world introduced tighter restrictions, particularly for banks deemed to be important to the global financial system. Most central banks and national regulators have introduced annual stress testing to check whether banks can withstand severe economic shocks and market turmoil while still supporting their customers. In the worst case scenario, systematically important banks are meant to have enough capital and so-called living wills in place to ensure they can fail in a relatively orderly way. However, these living wills have yet to be tested by a real-life banking failure. So these regulations are what are giving some people some confidence in the banking system right now, but as it says here, we haven't had a real life test. So let's take a look at what else we are seeing here. We have some news here. First of all, before we get into the breaking news of the day, deposits small banks fell $119 billion to $5.46 trillion in the weekend March the 15th, which was more than twice the previous record drop and the biggest decline as a percentage of overall deposits since the weekend March 16th. 2007. So that is a big piece of news there that we should all be aware of. Now let's take a look at what's been happening in the markets. Last week we saw that Credit Suisse granted $44 billion of loan from SNB. And we are now seeing, let's see what's within this article, that the Credit Suisse faced as much as $10 billion in customer outflows a day last week. So what we are seeing here is the price of the stock of these assets is falling in price. We're also seeing the amount of withdrawals for these banks falling in as well. Rising as well, I should say. The stocks of the banks are falling and the amount of withdrawals is increasing. And this causes a huge amount of problems because then they face liquidity issues. And if they face liquidity issues, they have to sell some of their assets, even if they're in an unrealized loss, and that creates a huge amount of problems. And it's like a domino effect that one problem causes another, which causes another, and then fear within the banking system causes the same for another bank, and we see some contagion within the banks. So let's take a look at the stock of Credit Suisse right now. We are down to 85 cents. Now, this has been a huge fall. If we take a look at the daily chart, you can see at the end of 2020, start of 2021, it was up at $13.52. So this has been a huge fall over the last couple of years. This isn't the start. This hasn't only just started. This has been in a downfall for quite a while. Let's take a look at this article here where the Swiss finance minister explains why the Credit Suisse needed a bailout. So we can take a look at this article here. Let's get to the good stuff. Let's get into the nitty gritty of this. So we can see here, Credit Suisse would not have survived Monday without a solution. Payment transactions with Credit Suisse in Switzerland would have been significantly disrupted, possibly even collapsed. So that is what we have been looking at here. It has been a very severe scenario. The finance minister also stated that the disorderly bankruptcy of Credit Suisse would have had a dire outcome, as much as double the Swiss economic output, and could worsen the global financial crisis. According to the minister, the country would have also become the first to wind down a globally systematic important bank should the bailout of Credit Suisse not have happened. But thankfully, it did happen. And we can see here that crypto has been unbothered by the banking turmoil. We will discuss that even more later in today's stream, but we are seeing how severe this scenario actually is. And we have to be thankful that we did see that bailout, but we may have more to come on the way. We just need to watch out for these and hope that we don't see any worse scenarios, but it is something we need to be aware of. And is the reason many people are flooding toward cryptocurrencies. In fact, let's quickly run over this now. The banks are failing not because of impacts from the cryptocurrency market, but from the unintended outcome of the rapid increase in interest rates, including poor asset managerial practices, among other things. But even now, the crypto market seems unaffected, with Bitcoin's price holding up more than an 18% increase in the last 30 days. Now, because of many people having fears around the banking system, many people are withdrawing their money from the smaller banks, and as we've reported earlier, depositing more into those bigger banks. And people are moving their money entirely and looking for safer assets. And Bitcoin has seen a nice pump off the back of this. Let's take a look at the next article we have here, which is that the Deutsche Bank shares a slip despite profit beat as traders looked to uncertain looks. So this was actually published on the February the 2nd, and we can see here that they reported a 1.8 billion euro net profit attributable to shareholders for the fourth quarter, almost doubling analyst expectations. So towards the end of 2022, it was looking incredibly positive, and now we can see that the fear around Germany's largest bank are the latest to ripple through Europe, alongside another hit to already struggling banking stocks amidst the deepening crisis. So Germany's largest bank sent shockwaves through the banking system on Friday, bringing fresh fears following the Credit Suisse saga. Last week, we reported on the Credit Suisse situation as it unfolded, as it took an emergency loan from the Switzerland National Bank. And after the Credit Suisse saga appeared to have come to a resolution, the situation in Europe had subsided until the news regarding the next bank unfolded. So it was reported to be a rise in the cost of insuring against the bank's default, which rose to a 4-year high that dealt a blow on the stock's price, but the situation appears to be worsening. They published in February that it had generated a profit of 5.6 billion euros before tax in 2022. But despite this, its finances have allegedly been in a mess and could be another domino in the downfall of the traditional banking system. The issue stems from how banks store their customer deposits. Typically, those deposits are invested into long-term bonds. So I can explain this really quickly. Bonds take deposits from their users and invest them into bonds. And these bonds have a value at the start, and then they have the par value at the end of their duration. And oh gosh, I've just hit my microphone. I hope that wasn't too loud. Between the start of the investment and the end of that duration, the value of that bond can fall, and it falls more dramatically if interest rates are increased. So the US have been increasing interest rates massively, and we've seen that as well all over the world. So when banks are investing into bonds, it means that bonds that have been created a couple of months ago compared to now have a lower value because the interest rate has increased. And that means that the older issued bonds have a higher unrealized loss attached to them. So the value of those bonds is decreased. The banks have already invested into these. These banks are all holding unrealized losses. So that is an issue that we are seeing there. And then when these banks need to liquidate those assets in order to facilitate their withdrawal requests, we can see a huge amount of problems because they need to create liquidity. So they need to sell those bonds for an unrealized loss and then come into liquidity concerns. Let's take a look at the chat quickly. We can see here, Jerome said, where is Hamzak? He's been missing for ages. Yes, he is. I've not seen him on these live streams for quite a while. I don't know where he is. That is a bit concerning. I hope he's all right. Let's take a look at these. Let's take a look at what's going on within the market anyway. We can see that the Deutsche Bank has seen a fall in its stock price. It's had a daily low of $8.85, around 8.31% from where it closed trading on Thursday. At the time of writing, the stock has seen some relief, bouncing back to around $9 mark. Now I have pulled the chart up here so we can see how it's responded this week. We can see here on the daily chart that we have seen it's currently trading at just below that €9 level. It did go all the way down to below the €8 level, so it has seen a slight bounce, but we'll be keeping an eye on this, so make sure to continue tuning into these live streams. Don't forget to like and subscribe and press the bell notification button so you don't miss the latest cryptocurrency news. As I said, we do these live streams every single weekday at around midday, talking about what's happening in the markets. And don't forget as well to hit the subscribe button. Don't miss out on these. We have a subscriber goal now set at 2,800 subscribers by the end of the week. So please help us on our mission to get there. Let's take a look now at this next piece of news we have here, which is the Fed balance sheet increases amid bank crisis. So let's talk about this quickly. Let's check that everything is running smoothly or looks good on my end. We can see that the Fed balance sheet has increased amid bank crisis. As the bank crisis continues, the Fed's balance sheet has risen significantly through March, and we do have a chart here that can see the Fed's balance sheet has shrunk by 7%, reducing by approximately $626 billion following the hawkish monetary policy Jerome Powell has adopted. And then we can see as of the 1st of March 2023, the balance sheet was valued at around $8.33 trillion. The collapse of Silicon Valley Bank promoted the current banking crisis, which has begun to creep worldwide. Other banks, such as Signature Bank, followed SVB out of the door, with other banks facing an emerging liquidity crisis. And we can see here the Fed appears to be prepared to solve liquidity issues as it has printed around $393 billion since the crisis began. This has increased the balance sheet by approximately 4.71%, reversing months of monetary tightening. So we can see this clearly here on the chart, and this has been breaking news in the last couple of days, something we definitely need to keep an eye on. We can see here US officials were working to increase the $250,000 FDIC insurance limit, with billions of dollars at stake and an uncertain road ahead of banks. So for people that don't know that, when you deposit funds into a bank, your deposit will be insured for up to $250,000 worth of your deposits. So we can see here, this could be partly the reason for the increasing balance sheet, or if the Fed is prepared to bail banks out instead of allowing them to go bust. The US certainly has a rocky few weeks ahead, and the Biden administration will be scrambling to resolve the situation, with a presidential vote approaching in 2024. So we do have a lot more in store, I imagine, in the next couple of weeks. Huge amount of news to discuss, so make sure to stay tuned on that, and we'll see how Bitcoin reacts to this in the next couple of weeks as well, because so far Bitcoin has been on the rise because of all of these fears within the traditional banking system. Whether it will continue, I expect it to, but you never know in the world of cryptocurrency. It's incredibly volatile. Moving on to more general cryptocurrency news this morning, though, let's take a look at what's going on here. Before we get onto some Bitcoin analysis, we can see approximately $89 million has been returned by the Euler hacker. So they've returned 51,000 Ethereum to the Euler deployer wallet address. We've been following this hack closely within our news articles on Crypto Saving Expert, and we can see here the return of funds reinforces the thesis that the exploiter may have reached a deal with the Euler Finance after stealing $197 million from the protocol last Monday. So when we see a hacker take advantage of a bug within a smart contract on the blockchain, usually the project that has had this exploit will offer a bounty. So they will say, if you can keep a certain percentage of those funds you've managed to get out of our protocol, and we won't press any charges, that'll be the end of the road for that. You can keep that percentage, you can return the rest of the funds, and we can all continue as we were. Now, obviously, this is really beneficial for that hacker. They can then withdraw those funds. And the problem is then, though, that they have to send back about 90% of the funds that they currently have. And some of those hackers can be a little bit greedy and decide against it. But if the protocol can come to some sort of bounty deal with the hacker, it means that this protocol can continue building. They now are aware of the exploit that they had, and they can continue working on their project. But let's take a look at the next article here and see what we have. We have Magic Eden rolls out Bitcoin's marketplace for ordinals NFTs. So the marketplace for ordinal NFTs, popular multi-chain non-fungible token marketplace, Magic Eden has launched a fully audited marketplace for ordinal NFTs on the Bitcoin network. Now, ordinal NFTs is a pretty new concept, so I thought I'd show you how we can learn about them here on the Crypto Saving Expert. All we need to do is go to cryptosavingexpert.com, click guides at the top of the options and choose encyclopedia. If we go down to O on this list, we can see here that we have an article about ordinals. Now we need to work on the or what we can do instead, alternatively, we can go to search and we can go to ordinals up here, press search, and we can see all the latest news about ordinals. And we can also see here that we have a description in the encyclopedia. So what are ordinals? They're an ordinal value is a unique number representing the position or order of an object or event in a sequence. In the context of crypto and Bitcoin, ordinals are being used to create unique and valuable NFT tokens that represent specific moments in time. For example, in the Bitcoin blockchain, each block is given a unique ordinal value based on its position in the chain. This value is then used to create a one-of-a-kind NFT representing that specific block. And we have definitions about many different things here on the Crypto Saving Expert website. We're continuing to grow that encyclopedia page. It's getting bigger and bigger and bigger. Don't I know it? Because if you go to encyclopedia, you can see that every single definition has a video created by me explaining that word in a little bit more detail. Now, there are currently around 400 definitions there about words within the cryptocurrency space, and the team keep throwing more at me, so I know there's hundreds on there, and I'm sure we'll have everything covered as the weeks go on. Let's take a look at the next article here. We have Bitcoin addresses holding 0.1 Bitcoin or more has hit an all-time high of 4.28 million as the bull run optimism rises. So people are feeling more positive that we're going to see a Bitcoin bull run in the coming months. I definitely hope so. The bull run is an amazing time to be involved in the cryptocurrency space. I am getting slightly tired of the bear market. 2022 was incredibly draining. So it's nice to see that we are seeing some optimism within the cryptocurrency industry. As we can see, the fear and greed index has risen slightly to 64 as the markets have started to move to the upside. Not something we've seen in a while. It was definitely in fear for a long time during 2022 as a lot of fear was flooding the industry. FUD was flooding the industry, and there was a lot of rumors about Bitcoin being dead and never ever recovering. Just like we see at the end of every single bear market, things have started to take a turn to the upside. 2023 has been incredible for Bitcoin and many different altcoins. And we can see that on the on-chain data that Bitcoin addresses holding more than 0.1 Bitcoin has hit an all-time high. So let's take a quick look at the price of Bitcoin here. We can see clearly that I have a level of support on the 1 hour chart drawn from these 3 wicks that's currently at the $27,484 level. We also have a previous level of resistance on the 4 hour chart at $25,250, which I think will be incredibly strong if we do come down to retest that. As I said at at the start of today's stream, we don't really have a CME gap from this weekend. We opened and closed at very similar levels. So at the moment, we have already filled that gap. There wasn't much of a CME gap there, as I said, but it's closed. Nothing to be concerned about. Jerome said you're a walking encyclopedia, Jess. I really am. I've defined 400 words. It took a long time, but I'm so glad they're all done now. Until the team throw another 30 at me this morning on the morning call, I was like, for God's sake, time to sit down and record more definitions. But it's making the site better and better. It's looking really, really good now, and we're continuing to build on all of the courses as well. So even if you think you've looked at the whole Crypto Saving Expert site, just keep checking in on it, because more and more is being added so you can continue learning about cryptocurrencies, and that is really important throughout these times. But I think that is all we have for today's live stream. I think we should call it a day now. We will be back here tomorrow around 11 or 12 midday British summertime, BST, talking about what's happening in the markets, taking a look at the latest cryptocurrency news, and taking a look at the Bitcoin chart as well. So if you haven't already, please make sure to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. We're on a mission to get to 2,800 subscribers over on YouTube by the end of the week. We are currently on 2,776, so we have gained a couple on today's stream, but let's continue towards that goal. Please make sure to